Hi, my name's Jim Lange, and I am here with Jen Hall, who is one of our number crunching CPAs, and would like to talk a little bit about the potential benefits of a financial master plan. So the master plan starts with you, and it starts with you actually filling out a questionnaire that we ask a lot of questions. We ask for a list of assets, we ask for a tax return, we ask for your wills and the beneficiary designations of your retirement plans. And at least at this stage, I personally look at every single one of those that come in. And then I make an assessment, gee, is this somebody that we think we can help a lot? Or is this person either properly set up or not potentially a good fit for us to do business? But let's assume for discussion's sake that I do find, and in either case, I'm going to provide a lot of value. Even if we don't meet, I'm going to send you something that I think might be helpful or give you a couple tips or whatever it might be. But let's assume that I do see, oh, this is somebody that I think that we could help. I think we can really provide these folks with a lot of value. And then I will invite you to say, okay, you have been approved, if you will, to go through the process that starts with a consultation with both me and Jen, or one of our other number crunching CPAs, but Jen is here today, and she is, let's call it, one of our senior number crunchers. And we actually just kind of get on the phone, or more likely a Zoom call, and we talk a little bit about, we both have your numbers in front of us, we both have your wills and your trusts and your beneficiary designations, et cetera, and those documents just speak volumes to me. But then we're asking some more questions about family goals, what you want to achieve, et cetera. And then towards the end of our call, with by the way, it's going both ways, and Jen chimes in too, then we will do, or I will do, to be more specific, a dictation that will summarize our meeting, summarize some of the major things that we talked about, and I will also summarize some of the opportunities that we have for improvement. Sometimes there are a series of Roth IRA conversions, sometimes they're gifting, sometimes they are changes in the estate plan, sometimes they are leveling of income, sometimes they are actually making recommendations for other family members, perhaps for your children and or your parents. So anyway, I put that into a memo that I do supply to you, and I also, with your permission of course, supply it to Jen. Sometimes I even provide a copy for your estate attorney. And then if we think that you are a good candidate to do business, and you think that you're a good, that we would be a good fit, and we agree to do this engagement, then we are off and running. And then it is Jen who is taking all this information that we have, your list of assets, all the information you gave us during the meeting, my summary, et cetera, and then we're really like going to town creating this financial master plan. So Jen, could you give me a little idea of what happens? And first of all, is that a fairly accurate description of a starting point?
Yes, Jim, I think that's a great description of what we do.
Okay, all right, so what happens at that point? So I go, okay, Jen, here you go.
Yes.
What happens now?
Okay, so we begin our process by setting a roadmap with our client. We look at where they're starting from, status quo. We look at their assets, their liabilities, their income, their expenses, and where they want to go based on their spending habits. And we take into account other special considerations if they want to make some big purchases or moves. So we look at all of that, what their goals are, and we try to identify gaps within their plan or what they're hoping to do, if there are potential problems that we may need to help them work through. We create financial projections.
Well, all right, let's bear down and
Okay.
get into the nitty-gritty a
Okay.
little bit. Let's just you finally said what I wanted to hear, which is we do financial projections
Yes,
as a
we
starting
do.
point. So is it fair to say that one of the things that you might do as a starting point, after you have the list of assets, liabilities, you have their tax returns, their income, their expenses, et cetera, that you actually make projections into the future based on what, let's call it the status quo?
Yes, we look at where they're headed
Okay.
based on based on continuing doing what they're doing, status quo.
Okay. All right. And then might you, let's say, suggest certain strategy changes that either that you come up with or even they came up with, and it might be things like tax savings that we might come up with, like Roth conversions or gifting, or things that they talk about, like second homes or more money for the kids earlier, et cetera. And then will you make another set of projections based on some different criteria that you and perhaps me initially, but more honed in with you and the client has made? Will you then do additional projections on some of the what ifs?
Yes, we perform multiple what if analysis, whether it be Social Security analysis, Roth conversion analysis, gifting, estate tax considerations. We use many of our software applications, including our unique proprietary application, Social Security software optimization that we have, Brentmark software to do our
two Brentmark programs.
Yes, for our projections, and we're able to look at every single year and identify what the makeup of their assets are and what shortfalls could be there, or oftentimes abundance and things that we can do to help
Now,
them.
are you sometimes combining different strategies? So you mentioned, for example, Roth IRA conversions, gifting, potential changes in estate planning, looking at different things. Do you do just, say, no Roth conversions, a series of small Roth conversions, a large Roth conversion, large Roth conversion but waiting until they retire, et cetera, and then you just do Roth and then do something else? Or do you actually combine? Well, what if we do Roth and gifts? What if we do Roth and gifts and estate planning?
Right.
So there can be a lot of iterations here.
There are a lot of iterations. We continue to run projection after projection, and we try to optimize and use a variety of methods to help them increase their overall net assets.
Now, even though you provide many iterations, you've never had an engineer who wanted more, did you?
Oh, yes.
Sorry
yes.
about that.
No, they like exhaustive, yes, many iterations.
But interestingly, they're sometimes the biggest fans of these plans, aren't they?
I think they are.
People that have some quantitative skills, because they can properly assess the difference between the level of our sophistication and what they might have seen before. Is that fair?
That's fair. I think what our clients love the most about our projections is we're not telling them, yes, overall, you can meet your retirement planning needs or your life plan goals. We're able to show them actual numbers and what that can look like for them. So every year.
And what that can look like if they take our recommendations and do certain things.
Yes.
Now, do you require clients to do exactly what we recommend, or we fire them, or do they get some discretion?
Well, so of course it has to be up to their discretion, and no, we let them know on paper, math-based of course, what those tax savings or overall net asset increases in their net assets could look like if they employ the different strategies. But we may show them a small Roth conversion of $20,000, I don't know, or what $1 million Roth conversion could do to their estate.
All right, so there's obviously a wide spectrum of different strategies that you might recommend. And your first answer will start with it depends. But what are some of the typical savings that you might find, say for a couple maybe in their 60s or 70s, between what we'll call the status quo and what you end up with in terms of recommendations that might include a series of Roth conversions, it might include a series of gifting, it might include significant changes in their estate plan, etc. Can you give us some idea? I mean, are we saving people or saving people who take our recommendations $5,000, $10,000, $100,000, $1 million? And I know the answer is it depends. But after it depends, what are some of the other observations that you can make in terms of potential benefits measured in today's purchasing power?
So I wouldn't say it was $5,000, Jim.
Okay.
They probably wouldn't need us, but
I wouldn't
yes,
take that job, frankly.
Exactly. But somebody that's a couple that are in their 60s or 70s were, if they do a series of Roth conversions or gifting to save on estate taxes, sometimes it's $200,000, sometimes it's $500,000. And if we look at it even beyond not just their lifetime, but also the lifetime of the children and the grandchildren, it could be $1 million or $1.5 million. I mean, I've seen all different types of savings depending on the opportunities we have, because they are customized plans. So it's not something that is going to be the same for every person.
So we don't really have a rote process that we put everybody through.
No.
So really, we could have the best software in the world. And I think that we use just about the top software. And we have a very nice relationship with Nicole, I forget her last name, who actually owns Brent Mark,
Right.
or she's the president of it. And I know particularly Steve Coleman always calls, why doesn't it have this feature? I have to do this part manually.
Right.
And I'm sure that you have run into some of the same issues.
Yes.
But it's actually something that they can see on paper. This isn't just, oh, we think you'll be better off. This is, if you do these recommendations using these set of assumptions, you will be X dollars better off, let's say, during your lifetime.
Yes, yes, we are able to give them quantified numbers in a report that we're able to show them.
And you might show them, let's say, status quo.
Yes.
And then a number of variations, maybe variations on Roth conversion, Social Security, gifting,
Yes.
etc.
We show them each piece of how that contributes to the overall net increase in assets.
All right, well, let's take for, that sounds great for somebody who might say, well, my goal is to optimize my plan and spend my last dollar and die. What if somebody has a little bit of a different idea and they are interested in preserving and actually building their estate and having their kids benefit the most from our strategies? Would you say that a lot of our strategies are actually potentially even more beneficial for the kids and grandkids than for the clients themselves, again, measuring in purchasing power?
Yes, so if we're speaking about Roth conversions, that can benefit the client that we're working with by savings in Medicare and Medicare surcharges or capital gains and
Just
net investment income taxes.
Right.
So it can save them.
And plus just the plain old income
Yes.
taxes that
Yes.
they're saving because their minimum required distribution is lower.
Absolutely. But we can also quantify even more to the next generation, to their children, because they're allowing that those Roth IRA monies grow for 10 years and sometimes, depending on what type of beneficiary, for the rest of the beneficiary's lifetime. So that growth can be worth $1 million to the beneficiary, depending on the size of the account and how many years it has to grow.
All right, you mentioned gifting and saving in estate taxes, and I'll expand that to include inheritance taxes.
Okay.
So for example, Pennsylvania's at 4.5%. Let's say, to pick a number, you make $1 million gift, you live 20 years, that $1 million grows to $4 million, so you can potentially save, what is that, $160,000 just making that one gift for inheritance tax purposes. Does it also have an impact on the child's life if they get a significant gift, say, in their 40s, compared to having a large inheritance in their 60s or even 70s?
Yes, because oftentimes a child that's in their 60s or 70s, they don't need the money then. They need it earlier in their life while they're raising their children. And the impact that the parent can see on their child and how their child's life has improved and is an incredibly rewarding process. So we see that all of the time. Sometimes we'll have a client that'll say, I don't want to wait until I die to help improve my daughter or my son's life. I want to give them money now because I know they're struggling and they need it now.
And will you help somebody say, all right, well, this is a reasonable budget on how much you can give, here's a reasonable budget on how much you can gift, and that kind of thing?
Yes, so we help...
Based on numbers, not just based on a hunch, is that right?
Oh, no, it's based on numbers. We give them parameters and certain dollar amounts to let them see how that impacts their overall estate and to make sure that they have enough money for their lifetime.
All right, well, this has been terrific. Is there something that you want to add that we haven't talked about, something that you frequently do for somebody that we haven't touched on?
I think the main point I want to add is that we are pulling all of their resources together and trying to let them see everything, an overall comprehensive plan, and not just bits and pieces. And that alone gives them comfort I can't tell you how many times that we've had clients say, you have given us the peace of mind. We didn't know what shape we were in, and now we feel so good about where we're going, and we feel like we have a pilot that's helping us navigate these financial waters that were so confusing to us.
Well, that sounds pretty gratifying. Is this something that you enjoy doing, or would you rather just sit there and crank out 1040s?
No.
Or do you actually like to do a little bit of both?
I love to do both, and it is extremely rewarding when you can just see a client feel really good about where they're going and what they're doing.
All right, so Jen, you actually prepare 1040s yourself.
I do.
And part of the software that we use, in addition to our unique applications in Excel and the Brentmark programs and the Bob Keyboard programs, is actually our own tax preparation software.
Yes.
Where you can you picture somebody without a tax background or somebody who isn't a tax preparer doing work at this level?
I can't, because so much of what we do is tax motivated, and that's where some of the strategies are done, are through knowing what's going on with the tax code.
Yeah, I know that I always like to think, oh boy, Jen is so smart, she should be spending all her time doing all this really high level planning. Would you like to do that, Jen? And you said, no, I want to crunch some 1040s.
Yeah, well, I like to have the background to be able to assist the client.
Okay.
I mean, I think it's important to know what you're doing instead of just saying certain things.
All right, but this whole process will typically start with a client contacting us, us sending them our questionnaire, them filling it out, and then getting to me. Is that right?
That's how our process starts.
Okay. Well, thank you very much.
Okay, Jim. Thank you.